General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Work. Believe me, it's over with. April, May, June. I'm pretty sure this is week 1 for June. Yep, June 2nd through the 5th. June. June. Change this. This last month. Hey, sentiment. Hold on. Let's get this. American credit. Where is that? Sentiment survey. The bearishness went back up. A lot of volatility, I think, is driving this market crazy. So this is 528, which is last Wednesday. No, the Bears sentiment. It just went back up. Sentiment dropped. Right, 4%. It's on the side. remains about the same. Let's look at this VIX. TC. This VIX is looking like mm, commercials got 44% of the open interest in the long by like 5,000 contracts. It's kind of it's kind of betting the VIX to go up, which makes sense. Just mm, the bullish VIX, higher volatility. Weak, which makes sense. Hold this in here. Hmm, VIX, CLT. Commercials on that short approximately. Okay, this is actually interesting because I can see this based on the VIX which reported. Here's the breakdown. Total net positions in the picture. Commercials net short approximately 26. Large speculators are net long. Small traders are net short. Bullish are large speculators. Commercial smart money usually correct. They're net short. Small traders are also net short, suggesting some alignment with commercial. Latest positions, commercials, active hedgers, net short, large speculators, net long. Hedgers bearish, speculators bullish. Since large specs are heavy long, commercials are near extremes on the short side. VIX itself is relatively low, implied by positioning activity. A reversal of volatility spike is likely for commercials are aggressively short VIX. It means they expect volatility to rise. And the current claim might be unsustainable. This aligns with potential market correction or volatility breakoff. Usual strength is okay. Yes, commercials holding one of their largest short VIX position is a strong signal, according to Larry Williams. It's not especially at historical extremes. This often preceded major market shift. Big move in the VIX upward is likely on the deck. Current positions of large speculator versus small traders compared to commercials. Large specs are long, small, or short. They're typically incorrect. Commercials are short, contrarian signal given their past success. This can indicate current VIX levels are too low and reversal upward is imminent. That's what I was thinking, just because of the week. Mm, big seasonality tends to spike late summer into October. Okay. Fixed call options or volatility. Long. I never played options in VIX, which is interesting because I didn't even know you could play VIX options. That's going to be interesting. Let's go to Forex Factory. Who talks today? Waller talks at night. NFP week is textbook trades Monday through Wednesday. Thursday, expect chop before big news on Friday. Give me Fed watch. $94 no change. NFP week, this is the last week that can change that. Team. I'm watching this week, even though I'm expecting them to be good. So good news is rallying market. And the main sentiment right now is tariffs, not economic data. Still, they're doing that thing where they every time Trump do something, they block it. And then he go to the Supreme Court and then they unblock it. And then sometimes the Supreme Court block it and then he appeal it. So it's um, like some children and Trump build the sandcastle and the kid come and knock it down. And then Trump tells, then that kid get his ass whooped. That's basically what's going on with policy. We had 70%, 73%, no change in Fed fund rate. 30th of July. Mm, we will see. Tariffs, earnings. See, I don't think it's any earnings this cycle. We just had all the important ones. Hold on. AVGO earnings. AVGO is a big docu. I don't like docu. Let me get this snake charts. AVGO is number 9. AVGO is number 9 in the NASDAQ in the reports. Stay after market closed. Let's look at the dollar. It's a huge gap. I think this gap needs to be dealt with. This was our old launching pad for this move. Retracement expansions does make sense. For dollar, I still think we can run this low, but NFP can push us back up into here. So watching ranges will be this is the range of price I'm looking at. Swing low, swing high with the down candle. I don't like that. This is a weak swing high. Weekly. This will be a daily. Let me see what the weekly looks like. Okay. Tool up below and save it. Swing highs need to be with an up candle. Swing low, that's correct. Yeah. So last time we broke a low, we did revisit it. We didn't take out this failure swing. And we have a flat top right here. Let's see here. Failure swing liquidity. We could just accumulate here, but I'm still thinking we're just gonna stay in this range. Just because the week that we're in. Kind of add EQ at the range. Since this is a dollar news heavy week, I will watch it, not stalking it so much. I won't lower, but see the need for the huge, what would that be? Volume imbalance, huge daily volume imbalance to be handled. Just here, closed here, opened here, and range. Eat this, EQ of this candle no more because we already closed through it. I wanted us to close through this to confirm lower prices, even though we came back up. This is balanced. This candle's kind of key. We could just take this candle and then drop, but not with this news this week. This is a chill at the dollar because the dollar could chop. The dollar could chop harder to this reliance on employment data. Let's go here. Really, let's go here. Let's look at the dollar. Who has all the open? Non-commercials really do have the open interest, and they're short. Commercials. Open interest in that short. Not by a lot. Commercials. Wow. But that could be a hedge against the short positions of the non-commercials. Let me throw this in here. Let's do this. Um, COT. Wow, to spit this thing out fast. Okay. Total net positions in the picture, commercials, 36 short, producer, merchant, processor. Non-commercials, large speculators. Kind of reminds me of commodities. Is the commercials are the producers of it, kind of like the people who sell the gold. They play the opposite side just to hedge their position. Non-commercials are long, net, positive. Non-reportables, net positive as well. Everybody's net long. Strong contrarian signal from the commercials. Only the active traders further increase bearish stance. The commercials. Large speculators reinforce bullish bets and small, they marginally increase their longs. Mm, This is a textbook overbought setup. Expect a reversal or a downside breakout. Net short multi-week extremes has increased significantly. Usually strong commercial bearishness. Okay. Contrarian signal commercials often win in the end. Their current position warrants of major opportunity to short the dollar. So prepare for weakness. Dollar tends to weaken mid-June to early July. June just started. So this week could still be a bullish week. And then the commercials start getting paid. Okay, let's look at this. Let's do NASDAQ, since that's what I'm looking at. CME. So I'm CME. Where's NASDAQ? Here we go. And we got the commercials short NASDAQ with 53% of the open interest. Mm, So let's do this in here too. NASDAQ. Total net positions in the picture. Non-commercials, net long, commercials, net short, non-reportables, net long. It's balanced. Large speculators and net bullish, commercials, moderate polarization, not an extreme. Only active traders, net bullish, commercials are flattening positions. So they sold a lot of their longs. Small traders are net bullish. They added long exposure. They're neutralizing. Not extreme enough to warrant a reversal signal. Commercials are scaling back. Is a possible continuation. Hmm. It's not a historically extreme, but they liquidated 11,000 long. So they cashed out, which is smart. It's not a strong setup yet. A watch list setup, not yet tradable. That's good. Good information. So I was looking for shorts. How do current large speculators and small traders compare to commercials? Large speculators are net long, small traders are net long, commercials are net short. Crowd is leaning long, smart money. Commercial is opposing, but not aggressively. So it's mildly bullish retail with speculating, just having optimism. It's not enough to fade yet. NASDAQ typically weakens mid-June to July. The seasonality aligns with commercial selling and could pressure prices soon. Seasonal summer weakness to look for shorts and exit loans. So it can offset this month. It is Q2. Bullish, commercials, mildly bearish. Commercial liquidations. Okay. Low to medium conviction, bearish watch list setup. That is a beautiful breakdown. Definitely got to keep studying that. Stay compliment. Stay compliment. Well, if we're just in this range, we got old all-time high up here. We really don't have an inefficiency like this. It's the closest thing that we have, and it's a brand new month. So we can say this is like a BPR. Change this color to like gold or something. But we're still in this range. We swept the high, we swept the low. This high should be next. It makes sense. We could take all-time high because this candle did close above this candle from the monthly point of view. Current interval only. And this is a beautiful smash day with this candle closed above this one and that one. Super bullish on the monthly. All time big drop. Week. This previous week's open price, we did close above it, but we didn't utilize this candle properly. Like if we was gonna close above this candle, we should have closed above it. This is kind of that chop that they probably was talking about on the CLT. Yeah, most definitely. I don't know what this is. Okay, it's a fib. It still looks like a good draw, just like a bullish bias. This failure swing could get smacked. See here? No, we did not close above a down candle. So could just be holding for the nose just to go higher. No, 22,020.25 is liquidity pool that is untapped. Tracement objectives will be flat bottom and 2373.75. I don't want this BPR here. Okay, that's better. To the daily. Mm, this is what's crazy is we're here playing at this EQ. This is where we at in this range. Oh snap! What did I just do? Hold on. In this fractals, push up, push down. No bodies have pushed through this high. So it's just like stop hunt, stop hunt, stop hunt. This is our current swing, high swing low. This is bullish though. And we did come down into here. We reached into discount. Definitely an order block. We could see just higher prices, like textbook. No, don't have any body closures. Uh, range. What's the accumulation range? We just have weeks. We respect it. With a shorter block, but it's not strong due to price digging below EQ or below the mean threshold. This is trapped order flow. Scalp environment. Yeah. H4. It did come back to Tuesday open price, which was cool. This was what, Monday? So whole new week opening gap here. Really here. Shoot yellow. Black text. It's undealt with. It's the most obvious BPR here. This daily fair value gap is now with closed on a daily is still respected. And previous week's low is here. We could still run that. Don't like how we're not closing it. It looks like it wants to go up, but it's still holding its chopping. Being held still. Gotta wait. I want to buy low lows and sell above highs since we in a trapped order flow market. To the H1. Interesting week. Thursday was the high, but lots of chop. First target, F last week. Then week before, previous week's low. Looking for buys under the old weekly low. Makes the most sense to me. As far as sales, I would wait for the H4 BPR or a sale at the daily fair swing. And I believe that's at 20. Yeah, 200225. 200225. 2020 2025. The sales look better because it's more levels to sell from. Sales do look better, but I need order flow to smooth out before I just guess and try to hit big targets. No raid, no trade. All right. Is that on that?
Let me stop this. Damn. Damn.